Happy New Year, Maverick traders. This is Rob Reinhold. It is good to see everyone again. I cannot believe here we are, 2023. So let's talk about the market today, and let's talk about the market this week. Because this week, the market is basically down a little bit. We've had, again, the markets were closed on Monday, so we had a gap up and a sell-off on Tuesday. We had a gap up and a little bit of gain on Wednesday, and then we had gap down and a sell-off today. So the markets are just looking very, very sick here. The Dow was down 1%, S&P down a little bit more than 1%, NASDAQ continues to underperform, down 1.5%. You can see oil had an up day, but yesterday it was down 4.5%. Gold slipping a bit too. Overall, you can see just selling all over. Our advanced decline line, 65% of stocks went down, so 2/3 of all stocks went down, and we still have more stocks below the 50-day moving average. Today, we did hear from two Fed speakers. Chairman George said that the market needs to get ready for 5% interest rates to keep inflation from getting out of control. We heard from Bullard. Now, Bullard said a few positive things and a few negative things, but he did say that inflation is likely to stay longer than the market expects. Overall, you can see the market was down today. And if we take a look at the market action recently, we had this big sell-off from December 12th all the way down here. And you can see there's a real big line of support here, 3,800. Here's the problem. There's a real big wall here at 3,880. We are trading inside of this range. And you can see it doesn't look like it wants to break out yet. We are definitely going to be approaching the downside of this range tomorrow. Tomorrow, we'll have to see what happens. If we get a break below this low, we might need to get a little bit more bearish. If this level holds, the best thing you can say is we're stuck in this range until something happens. Now, we do have the December jobs report tomorrow morning before the bell. I expect this will move the market 1 to 2%. It might move us down at the bottom of this range, and if it does, then you definitely have to become a little bit more bearish. Look, you should already be bearish in the markets. We're below the 50-day moving average. All of our technical indicators are telling us to be net bearish, but not too bearish right now. A break below this level would be the next level. Hey, we need to get even more bearish here on the markets. If for some reason we do break out above this area, I'm not going to be chasing it because we're running up into some serious overhead resistance. We're running into moving averages. We're moving into a lot of resistance. So I'm going to give this a 65% chance that the market breaks to the downside, 35% chance to the upside. If we take a look at the NASDAQ, it looks horrible. Now we are at lows. We're at lows. We bounced off those lows in November. We had this big gap lower and big move up. We are at the lows that we saw last fall. And look at this. We got this little bounce up and we are now approaching this level. These little bear rallies give this market some momentum to the downside. If we break below this level, we expect some technical selling will come in and hit this market. The markets aren't giving us a lot of good signs. We have no idea what the market's actually going to do, but if we take a look at all the technical indicators, the market is kind of telling you it wants to go lower. If we come in here to the heat map, you can see that outside of energy was the only green. Maybe a little bit of good news in the entertainment sector, but outside of that, it was just red, red, red. And you can see big cap tech continues to get hit. Semiconductors down big, information services down big. Again, everything is just looking really, really nasty, especially in tech. So our market outlook, we've got to stay with where we were. We were at a -2, and until we really break down below, we're going to have to stick with this -2. Once this 50-day moving average finally turns down, then we'll be able to go to a -3. But a breakdown below this level probably takes that moving average and tips it over to where within at least a couple days, we'll probably go to a -3. -3 is the most negative we can get on the market. We have only 1 day left this week, and we've got a payrolls report. Anything can happen off that payrolls report. But I still feel pretty good and pretty strong about this -2 outlook in the market. Let's take a look at a couple potential trades. Now, ironically, I found some great bullish trades. I found some really good bullish trades and a whole bunch of bad bearish trades. mostly in the technology and financial sector. So let's take a look at some of the bulls here. My favorite sector going into this year is materials. I think the materials sector is actually going to perform really well. And if you go into the sector, you'll see that there's lots of stuff moving higher. And here we have Dow, DOW is a ticker symbol. As you can see, we got this big run in October, November, and we have basically just been basing up here. Just basing. The whole market is sold off, and you can see that it hasn't. It hasn't, and we're actually approaching a breakout point. So for me, I'm looking at this. I've got 55 as a target. I think you could easily just take a look at a very simple 50, 55, either bull call spread or diagonal call spread. I think that is the play. Remember, we are not bullish in this market. We are at a -2. So any bullish trades we take, we have to understand that it's going to be going upstream. It means you don't get these huge breakouts and runs. You cannot play a breakout when the market is weighing everything down. We like spreads here. Even doing like a 50-53 diagonal call spread is a much better play than just trying to get very directional on these. So again, not very directional on our bullish trades. Here we have another area that's doing really well. The discount stores, Ross stores here, doing really well. You can see same thing. We bottomed out in October, had a huge run, and then while everything like tech sold off, this just said, I'm tired. I need to take a break. If this can break out above, maybe 125. However, this is where I really love diagonal call spreads. I don't have to say I think it's going to 125. I can say I think it's going to 120 and do a diagonal call spread. So like a 115, 120 diagonal call spread. And if it hangs out anywhere like in this area, I'm happy. If it does take off and run, okay, I'm not as happy because I don't make quite as much. But this is a theta positive trade. If the stock goes nowhere, I get paid. If it goes up, I get paid. If it goes down a little bit, I'm probably still going to make a little bit of money. It's only when it goes down below a certain point where I start to have to worry about it. These are the kind of trades I want to be making bullishly in this market environment. Now look, I do not have any sideways trades. I'm really disliking sideways trades here. I was doing mostly sideways trades for the last 3 weeks of December. I think we're pretty close to a breakout in the markets. Here we have Synchrony Financial. We've got this move lower, and again, low base, and this thing looks like it's ready to break down. 32 is that point. A break below 32, and you can see next level is probably going to be 30. That's going to be my target on the trade. You can be a lot more aggressive on your targets if we break down tomorrow, because again, we'll probably go to -3. Then all of a sudden you want to be more aggressive on your price targets because we have a trend moving lower. A 30-32 bear call spread is a no-brainer. You could even look at some long puts. These are some trades you could take a look at in the options market. Moving on to a tech. Sentinel-1. This has been a terrible performer. Didn't even have a rally in October. Remember, the market bottomed out like October 15th, and we rallied up. This one forgot to get the memo, and here we are. We've had this really nice bear rally. I love these. 13 up to 1550. Do you realize that's about an 18% rally? So here we are. Yes, it's a big red candle. We still have at least a couple more percent to go. And if we break down lows, I think 11 is a target on this one. I think you could do an 11-13. You could do a 12-13 bear call spread. I think this is the one you just want to put a spread out there, give it enough time, and if it breaks down and runs, then it's going to be a good situation. Let's finish off with tomorrow's outlook. We do have the payrolls report out the first Friday of every month. It comes out an hour before the market opens. We are likely to be plus or minus 1 to 2% when the market even opens up. If we gap down, I'm not going to be chasing it. So one of the things the market does like to do, it loves to pierce support levels and then recover off those levels. Let's say tomorrow we gap down and we recover. I don't want to chase that on the short side. Let's say that we gap up and we sell off. I want to chase that one. That's going to be the one I want to chase. And let's say that we gap down tomorrow and we can't recover. I'm absolutely looking to short that as well. So the only thing I don't want to do is in the morning, if we get a big gap down 2%, I don't want to enter new trades there. If by the end of the day the market is still down, I'm all for adding in some trades for next week because it's going to be a real good confirmation that we are going to close below that recent support level at 3,800 on the S&P. If we gap up and lose it, I'm all about chasing that as well. That's going to be a great short entry as well. If for some reason we gap up and we hold, then I'm just going to go into the weekend and I'll come back next week and I'll look for some new trades and I won't enter anything tomorrow. The numbers we're looking for, 200,000 new jobs, 3.7% unemployment rate. Probably the most important number is the unemployment rate. The Fed has said they want to see 4.3%. If that unemployment rate doesn't budge, it's going to be bad for the market. If it goes down, the market is going to freak out. So if the market goes up, let's say it's a 3.9, the market is really going to like that. We might be able to see a little rally. I don't think we're going to get that. Job market is still pretty strong here. But as always, we have no idea what this number is going to be, so we want to look at the report, look at the activity off the report, and then make our trading decisions based on the chart after all of the movement has taken place off of that. That wraps up my first roundup of the year. Looking to make 51 more of these this year. Everyone take care, and let's go make some money. Goodbye, everybody.